Welcome to the Jill on Money Show. It's Friday, July 19th. And in the heat of the summer, what is more fun to talk about than your money? I know. You want a vacation? I don't care. You get your vacation. You don't get to turn this off all the time for the whole summer. You get a little break. That's fine. But we would love to have you unburden yourself about whatever is going on in your financial life. If you've got a question, all you need to do is go to our website, jillonmoney.com. Click the Contact Us button and let us know if you would like to join us on the air. Just check the box. Mark does everything else. While you're on the website, sign up for the free weekly newsletter. It comes out every Friday. So if you were signed up, you'd get it today. How great would that be? And you can check out everything else that lives on our website. We've got free stuff. We've got stuff that costs money. Specifically, I would like to point you to our YouTube show called Jill on Money, powered by the Compound. It's awfully fun. You should check that out. And today is Friday, and we love our Friday focus. So we try to get a theme every Friday. So today our theme is this strange scenario that exists right now. We had a big tax law that went into effect, right? The Tax Cuts and Jobs Act of 2017. And a lot of that law changed the tax code, changed the tax rates and the brackets. It made permanent corporate tax rates. But a lot of the individual stuff sunsets back to where it was before this tax law was enacted. And these upcoming changes to the tax law, they impact every worker, but also any individual who's thinking about their estate. So how do these upcoming estate tax law changes impact you? Well, you can give us a holler. Just go to jillonmoney.com and click the Contact Us button. But that is going to be our focus today, which is estate taxation and the fact that it's very difficult to do a lot of planning this moment because we don't know what's going to happen. So let's take some emails that are dealing with some of the estate issues that are floating around for you guys. This one is from Bob, who writes, "My wife and I are both 60. I retired from corporate life this year, and I've begun working with a startup. We are well set for retirement. We're in the process of updating our estate documents to replace my sister as trustee and executor with our adult children." Oh, man, this is a very good question to have right now, by the way. So the kids are in their early 30s. They're married. They've got some grandkids, each of them. So Bob goes on to write, "We've let them know that we're updating our estate docs to include them. We'd like your advice on how and when to talk to them about our assets. We want them to know enough to be able to execute their role, but we do not want to burden them with expectations." That's interesting. "Our kids have good heads on their shoulders. They're gainfully employed, but will not likely experience the level of financial success that we've been blessed with. How do you strike the right balance in the estate process? We don't want our relationships to get weird once they learn what we're worth. Thanks for your thoughts." You know, I know that it's sort of weird to have these conversations. I really do. But I think coming through the front door and not protecting or shielding them or not bringing a burden to them is actually going to be a very illuminating process for both of you. They know you got a few bucks. They may not know how much. I think that once they're in their 30s and they are parents themselves, in order for them to actually make plans and also understand what is going on in your lives, you just got to tell the truth. And so I think you do it with them first and basically say to them, we're about to make our changes to our estate documents. You tell them what the numbers actually are. Here, we have a net worth of about blank. Of course, we have no idea what's going to happen with the estate tax law because that could change some things. But here's what we're thinking today. Maybe this is also something that you want to incorporate into your conversations with the estate attorney. Because look, if I knew that my parents had, let's say, a lot of money, like $10 million, right? And there was a choice that you might be able to have, which is you might say to your kids, hey, like we can fund your kids' 529 plans fully, but that will mean less money for you down the line. Is that something that you would prefer? Like, I think this can actually be part of your estate planning process, and bringing them into it is going to give them the information they need. So I think you do it first yourselves, kind of maybe superficially a little bit, but then bring the money aspect in and maybe have them come with you to the estate attorney's office in order to actually have more meaningful conversations. So that's what I would do. And by the way, when we talk about sunsetting, one of the things to look at is that, way back when there was this thing like, oh, you could give $1 million or leave $1 million to anyone, there wouldn't be a tax due. So that's the exclusion amount. So as of 2024, the amount of money that is excluded from taxation is $13,610,000. Now, again, in 2026, the stroke of midnight on January 1st, 2026, the tax law will revert back to what it was. And so that's also part of the reason why you should be doing some planning with a qualified estate attorney. Don't do this on yourself by yourselves, gang, especially if you've got something that's closer to more like $5-8 million, because those are the estates that could actually face some real changes if things sunset back to where they were. All right, this is from Denise, who writes, my husband and I are both 65 years old. We've retired. My husband works half-time. We've saved and invested all of our adult lives. We have a comfortable estate. It's worth approximately $14 million. Now, wait a second. I just want to point out, gang, the estate's worth $14 million. I just told you the exemption is $13,600, but it's $13,600 per person. Got it? So these folks are still under the estate exclusion amount. So they got $14 million. Now, my husband does not want to talk about estate planning. We do not have any children. We live in California. He made a will 30 years ago. He left his property to me and a few relatives. 2 years ago, we talked with an estate planner, but my husband could not decide what he wants to do regarding the estate if I were to die first. He says he really does not care. I made a simple will, leaving some of the money to my family if I die first. I would like to have this sorted out, especially if we were both to die at the same time. He does not want to leave money to his relatives. He does not want the bulk of the money to go to my family. We can't decide on a charity we like. He is suspicious of having money locked in. Do you have any advice for me? This is some question. Okay. Like, he knows what he doesn't want. Just how about this? Can you leave it to a broad charity, like a community charity? If you live in California, I know in a lot of places they have like community charitable organizations where you say, like the Bay Area Charitable Trust, where like you basically leave it to an organization where you use them to give your money away. Kind of like what Warren Buffett did with the Gates Foundation. I'm going to leave it to this foundation. I'll let the foundation decide. You don't have to find a charity. And also, one of the other things you could do is just to say, if you don't want it to go to my family and you don't want it to just end up there, then you're going to have to make a proactive decision. I think it's a good idea for you to kind of go ahead and at least make sure that the beneficiary designations are up to date. I don't know why the idea of leaving to a charity is coming. You're having such a hard time. He seems like a pretty distrustful guy. At the end of the day, if he doesn't want to do anything, he won't do anything. And you do what you need to do. And that's that. I wouldn't make this the hill to die on. Nothing horrible is going to happen. But I think it's very peculiar when people can't they know what they don't want, but they can't figure out what they do want. Okay, we've been talking about some estate planning on this Friday Focus, and how weird it is that we're about to have this tax law change in 2026 unless Congress does something. So maybe there will be a congressional agreement about what to do. But again, it sort of puts a lot of us in limbo land waiting to see that. So that has a lot to do with maybe whether or not you should do a Roth conversion, but it also has a lot to do with your estate taxation. So especially if you have a big estate, that is, at 5, 10, $12 million, this could be something that kind of ensnares you, because right now you can protect, if you're a married couple, about $27 million from taxation. But anything that is below that is not going to be taxed, right? Anything above that would be. But the thing that's interesting is that if we sunset the tax law, many more people are going to have to pay estate taxes, people who were probably figuring they wouldn't have to. So, okay, let's take this next question. It's from Suzanne, whose subject is retirement, estate planning, diversifying. So Suzanne says that my husband is retired and I'm in my last year of working, and I think we should sit down with an advisor and plan our next steps. We tried one firm. We had a bad experience, not once, but twice. And we need to meet with a fiduciary. We have thrift savings plan accounts from our employer, Roth IRAs with Vanguard, another account with Vanguard. I really feel like we need to sit down with someone. I don't know where to start. And what about with the estate planning? Is there something that we should specifically keep in mind? Okay, so I think that if you want to find a fiduciary advisor, you can do so at NAPFA, the National Association of Personal Financial Advisors, or napfa.org. And you type in your zip code and you'll find somebody. In terms of an estate attorney, this is kind of critical, because what you want to try to identify is a person who does estate planning, meaning not the person who did your real estate closing, not the person who helped your son and daughter-in-law get divorced. Somebody who full-time does wills and trusts and powers of attorney and healthcare proxies. Now, you may not have any type of estate tax issue. It doesn't matter. You still need someone to help draft these documents. So the thing that I've often done is started with the person who does your taxes, or a CPA, or a friend in town who can help you out. You can also wait until you find that fee-only fiduciary financial planner and see if they have somebody that you could talk to. So I hope that helps. Okay, and let's see. This is from Mandy, who writes, "Hello, Jill. I love your broadcast. It's so helpful. Thank you. I have a distant cousin who has never been married, has no living parents, no living siblings, and no other living close relatives other than some of us, the distant cousins." Okay. He's got real estate, a home, vacant land, and personal property. He has no will and no estate plan, and doesn't seem interested in getting one. If he passes away, would his estate go to his state of residence and they'd determine what happens, or would distant cousins of his inherit his estate? Thank you very much. Okay, the question you are asking is a good one. If you die without a will, that means that the estate is intestate. And it does mean that the state of residence would then determine who gets what. In his case, the likeliest scenario is that because he has no relatives, they'll go through everybody and they'll say, maybe you guys will be the ones. But it is on the state to determine that. And I don't know if you're friends with him, or, I know you're distant, but if you have any kind of conversations with him, the other thing you can do is just to say to him, hey, look, it would be great if you could just put these things down on paper. Otherwise, this is going to get knotted up in the state probate process. Maybe you want to leave something to a charity. Maybe you want to actually try to make this a sort of like a grand gesture upon your death. But if he's really not interested, yep, it's the state of residence that determines everything. So what's the bottom line here is that if you have estate documents that were drafted, more than 5 or 8 years ago, I honestly, if you have estate documents that are drafted pre-2017 Tax Cut Act, I would go and have them looked at with a estate planning attorney. I would start talking about this with your financial advisor and say, hey, you know what? We need to get this straightened out, or you need to be ready to act if we see some changes in the estate tax code. So I hope that helps everyone. It's been a fun Friday Focus talking about death and all that. That's great. If you've got a question about your estate, if anything else is going on, head to our website, jillonmoney.com, click the Contact Us button, and of course, let us know if you'd like to come on the air live. You can subscribe to us on the Odyssey app or wherever you find your favorite podcasts. Please leave us a rating and review wherever you listen. It is Friday. We like to do some business. Our music is composed by Joel Goodman. Mark Talercio is our executive producer and Web King. We are distributed by Odyssey. Please put your hands metaphorically or physically on someone's back. Someone needs a hug. Someone needs a pat on the back. Change your work, change your wealth, change your life. Thank you for listening, and we'll talk to you tomorrow.